Let's talk forgiveness. Hello and welcome to those joining us today. My name is Matt Venuto. I lead the sales efforts for ConnectPay Payroll, and I'm joined today by Drew Schildwachter, who oversees our operations team.
Hello, everybody. We're looking forward to walking you through everything you need to know about updates to PPP loan forgiveness today. If listeners are interested in applying for a loan, that updated recording is also available on our website.
For those of you who may not be as familiar with ourselves or ConnectPay, we are headquartered in Massachusetts and focus on supporting small businesses with payroll processing and compliance. We're essentially an extension of our client's payroll department. And since payroll is our everyday, we've learned the ins and outs of PPP loan forgiveness. So we're more than happy to share what we know with you. So let's get started. The forgiveness process begins with submitting an application to the bank, and they have 60 days to approve or deny, and then hand it off to the SBA. First, we should point out that the SBA Commercial Loan Servicing Center in Little Rock, Arkansas, as well as the SBA Center in Fresno, California, continue to scale up to take on an influx of applications. But as of now, we do not believe they have the appropriate amount of staffing to handle the 5.2 million in loans. Ultimately, everyone needs to decide which form they will file to apply for forgiveness. Under current legislation, there are three options: Forms 3508S, 3508EZ, and 3508. These represent the process for applying for forgiveness. These have all been updated on the SBA website as of January 19th. Most banks have not updated their portals, and the SBA is still accepting the older forms. Drew?
So here is version 6, which is the current 3508S for loans 150,000 or less. Depending on your bank, you may be submitting this information through an online portal, but we do recommend completing this form as a tool to prepare your submission to the portal. If your bank is not offering an online solution, they may want the actual form submitted in a PDF format. The banks continue to update their portals, and every day the system seems to be improving with processing. But let's walk through it together. The top section in red are your business demographics: legal name, DBA, business address, and this is new, the NAICS code. Borrowers can search NAICS lookup online and find their code for their industry. Then we have the borrower's TIN or EIN or social security number, and business contact information, phone, the primary person, and the email address. So the first decision is, this is a first draw or a second draw PPP loan. You check one box. Then you have your SBA PPP loan number, your lender's PPP loan number, the PPP loan amount, and the loan disbursement date. They're also asking for the employees at the time of loan application and the number of employees at the time of forgiveness application. This is for statistical purposes and should not be confused with the FTE calculations. Here is where they've made a change. The previous version had the choice between the covered period and the alternative payroll covered period, which allowed weekly and biweekly borrowers to move the covered period from the loan distribution date to the start of the next pay period to simplify the reporting process. Now, the covered period begins on the day the loan is originally dispersed. It ends on the date selected by the borrower, that is at least 8 weeks following the disbursement and not more than 24 weeks after the date the loan is dispersed. They next asked if the loan is over 2 million with affiliates. Now that checkbox will trigger an audit of the proceeds. Then they ask for the amount spent on payroll and the loan forgiveness request amount. And then you have to make a series of representations and certifications. The first is complying with all the rules around 7A and the eligibility of the PPP proceeds, and verifying that the application is true and correct in all respects. And then you sign at the bottom. So this is the simplest version, and the banks are requesting that the documentation be kept with the borrower. What we're hearing is that certain banks, they have different compliance departments, so it's not consistent what each bank is requesting for information. And then we move on to the covered period. So it's important to understand this before we move on to the EZ form. One of the first questions that needed to be answered by every PPP1 borrower, regardless of the loan size or form used, is establishing the covered period, and if applicable, the alternative payroll covered period. I should point out that for PPP2, that covered period was eliminated, and instead you can choose any period after your fund date between 8 and 24 weeks. However, as far as we know, this is not a retroactive change. So anybody that applied for PPP1 will still need to know their covered period. Even though the 3508S is short, some banks still required borrowers to submit payroll records. And to do that, every PPP1 borrower will need to establish the covered period and alternative if applicable. So we've created this handy form, and let's go through it. So basically at the top, you select your covered period, and that starts the day that funds are received and continues for 8 to 24 weeks, or 56 days to 168 days. Now for weekly and biweekly, you can select, you could select an alternative covered period, which began at the start of your next pay period after your funding. This allows you to not prorate any weeks. The instructions are included in the page 2 of the PDF. We suggest you print it and complete it and keep it with your PPP documents. Again, this was required on every application, and the payroll reports that you request must follow the dates selected. And we'll continue to wait to see if we get further guidance of how the original loans and whether they'll be able to use the alternative covered period. But at this point, it's a good exercise to have and helps clarify your process moving forward. I'll turn it over back to you, Matt.
Now let's discuss the loan forgiveness application form 3508EZ. This is a simplified application since it's only 3 pages long. The PPP forgiveness EZ form is designed for businesses that meet at least one of the following criteria. Business owners are self-employed and have no employees, or businesses did not reduce the salaries or wages of their employees by more than 25% and did not reduce the number of hours their employees worked. The top portion is your business information: legal name, DBA, business address, NAICS code, TIN, FEIN, or social security number, phone, email, and all relevant contact information. Then you have to select first draw PPP loan or second draw PPP loan. The SBA PPP loan number and lender number. The PPP loan amount is the amount that was put into your bank account. For the loan disbursement date, the day that the loan was dispersed into your account, which becomes the start of your covered period. This is the same as the 3508S. The employees at the time of loan application and at the time of forgiveness do not play into the full-time equivalent calculations, but they are there for statistical purposes for the SBA. Drew?
The covered period is now new. Prior versions offered the 8 or 24 week and the ability to, if weekly or biweekly, select an alternative covered period. Now borrowers can choose an 8 to 24 week covered period.
So what's important is if your loan amount is over 2 million, you must check that box. Anyone that checks this box will be audited. Therefore, you should retain incredibly thorough documentation.
So the forgiveness amount calculation. At ConnectPay, we have a custom report called Paycheck Protection Program Payroll Cost Report, as well as the PPP Loan Forgiveness Schedule A worksheet. Customers can just reach out to their customer service rep to request either report. We'll need to input your starting and ending period, and it will calculate what you need. Line 1 is payroll costs. This is easily obtained from the report. In line 2 is business mortgage interest payments, any business mortgage obligation that was in place before February 15th, 2020, and that was paid or incurred during the covered period. Line 3, business rent or lease expense. Again, any business lease or rent that was in place on February 15th, 2020. Line 4, the utility expenses. They've added 2 new things. You've got covered property damage costs. So this was added along with covered supplier costs. So this is PPE, things like face shields or plexi. And then they've covered, covered supplier costs is items like cloud computing and some of the utilities that were not included in the original. And then line 8 are covered worker protection expenditures. So that would be PPE or acrylic and plexi designed to keep social distancing. So line 9 is the sum of 1 through 8. And then line 10 is the PPP loan amount. And then this is where the 60% requirement comes in. You divide line 1, your payroll costs, by 0.60. And then on line 12, it asks you to look up at lines 9, 10, and 11 and select the smallest line. That is the amount of forgiveness. And clearly you would like line 10 to be the smallest amount. That gets you 100% forgiveness. So on the old form, we did a quick demonstration here of payroll costs and going 8 weeks. So we just made up a fictitious company. We had $1,000 in payroll a week. So you can see that it was $8,000. They didn't have a mortgage. They did have rent of $1,000. And then we made up utility costs of $500 to demonstrate this. So we summed up lines 1 through 4, and now that's 1 through 8 on the new form. But you get to the total line 5, which is $9,500. Then we put in this fictitious loan amount of $10,000. Line 7, we did the math. And you can see on line 8 that in this case, 95% forgiveness was achieved. So on the next slide, we did the exact same requirements, except we did 24 weeks with 100% payroll. So we start with 24 weeks at $1,000 a week for payroll. We ignored mortgage, rent, and utilities to simplify things. And we brought that down to the sum line and have 24,000. Again, we entered the loan amount and then we did the math. And you can see in this case on line 8, now the full loan amount is the smallest number. So this is the benefit of extending the period and making the entire loan forgiveness process about one thing, and that's total payroll. And this is an ideal scenario for individuals that are not eligible for the employee retention credit. So moving on, for the 3508 EZ, you've got the certifications, and these require initials, but are very straightforward. And the individual needs to verify that the funds were used correctly, that they did not exceed the individual amounts allowed for ownership. And then moving on to the next slide, you've got your certifications, and that helps us understand that the borrowers, in fact, followed the requirements on 25% reduction, and they were able to use the EZ form because if they did have any headcount reduction, it met one of the groups of safe harbors that we'll discuss shortly. And then on the last page is optional. This is simply demographic information that the SBA will collect if you're kind enough to fill it out. Back to you, Matt.
Thanks, Drew. And the last option is the original 3508 form, which was introduced first. This form is required if you do not qualify for the other two simplified forms. If you are in the small minority that needs to use the standard form, we have a Schedule A worksheet available in both PDF and Excel. So the Paycheck Protection Program Flexibility Act established an additional safe harbor to the loan forgiveness reductions and full-time equivalent headcounts for PPP. This is referred to as Safe Harbor 1. Businesses that weren't able to operate at the same level between February 15th of 2020 and the end of their covered period because they were complying with COVID-related guidelines issued by the Secretary of Health and Human Services or the Director of Centers for Disease Control and Prevention, or Occupational Safety and Health Administration, all qualify for this safe harbor. The safe harbor includes state and local governmental orders in addition to those federal compliance guidelines I just mentioned. So it appears that the SBA will be broadly interpreting this safe harbor and anticipates that the vast majority of borrowers will rely on this particular safe harbor as opposed to the other available safe harbors. If a borrower intends to certify that it qualifies for the safe harbor, the PPP forgiveness application requires the borrower to maintain documentation supporting the certification. This documentation includes copies of relevant governmental orders, copies of the applicable requirements for each borrower location, and relevant borrower financial records. We have a couple of examples here. One example for a restaurant could be tables must be positioned so to maintain at least 6-foot distance from all other tables in any high foot traffic areas. Tables may be positioned closer if separated by protective, non-porous barriers and not less than 6 feet high, installed between tables and high foot traffic areas. Another example for a retail establishment around capacity, 50% of the building's maximum permitted occupancy as documented in its occupancy permit on record with the municipal building department or other municipal record holders. And another example, in any case, no enclosed space within the building shall exceed occupancy of 10 persons per 1,000 square feet. So again, I mean, this is a very broad safe harbor, and all indications are that the majority of businesses that experienced any restrictions at all can make a reasonable case of why employee counts have been affected with that supporting documentation again. True?
Yeah, thanks, Matt. That's a good description of Safe Harbor 1, and that includes all those CDC or governmental guidelines. Safe Harbor 2 basically says that if you reduced headcount at the beginning of COVID, as long as you returned that workforce by the end of your covered period, then that satisfies Safe Harbor 2. So that allowed you to bring people back before the end of the covered period. And that also allows you to, again, use the easy form and attest. And then in addition, on the next slide, there are a series of FTE reduction exceptions. The first is if a borrower made a good faith written offer to rehire an employee, which was rejected by that employee, if an employee were fired for cause, if an employee voluntarily resigned, or if an employee voluntarily requested and received a reduction of their hours. Borrowers made a good faith written offer to restore any reduction in hours at the same salary or wages, but the employee rejected. Or borrowers who were unable to hire similarly qualified employees for unfilled positions before the end of last year, December 31st, 2020. So any of these FTE reductions in these cases also substantiate the borrower's loan forgiveness. So those all three are extremely important to document and then allows the borrower to use the easy form. So a couple helpful hints here as a recap. You want to, you've got two methods on your FTE calculation. One was the simplified method where full-timers count as 1 and any part-timer counted as 0.5. Or the full-timers, those are salaried at 40 and you don't include overtime. Those additionally are counted as 1. And then you add up all the part-timers and divide by 40. And that gave you your FTE calculation. So whatever you calculated to for the look back period is the same manner that you need to calculate for the covered period. Again, there are 2 safe harbors, the 6 FTE reduction exceptions, and you've got what was helpful was the lengthened covered period to 24 weeks that gave businesses a chance to reestablish business and then bring staff back. And the important thing is to keep all this document for 6 years. So in case there's ever an audit, you don't have to go back and recreate it. So the important thing is to document this stuff and keep it on file. The banks do not want it initially, but you don't want to not be organized if a request comes. So moving along to the original form. So this is the original 3508, and we're not really going to go into a ton of detail on this. With the new 3508S up to 150,000 in loans, that covered 86% of all the PPP loans. So we expect that 86% will use the simple form. And then the FTE exceptions really allow most businesses to use the EZ form. But if someone, for some reason, couldn't satisfy either one of those, then the original form is where you demonstrate that calculation of FTE reduction, and that calculates the percentage of loan forgiveness. So that Schedule A worksheet, we have a report specifically for it. However, in payroll, we've never had to document who is an owner to do our processes prior to this. So owners are included. This report can come out in both Excel and PDF. So if you have to go and use this report, I suggest you request it in both formats. That way you can basically use the Excel, remove the individuals that are owners because they don't belong on table 1, and make the adjustments and then go ahead and save it. And then you've got your documentation that follows the requirements for it. So then moving along, Matt, you want to cover this?
Yeah, sure. Yeah, I'll jump in. So fraud is still a major concern. The SBA's concern with fraud has been a major holdup in overall forgiveness. The Justice Department, along with the FBI, continues to bring forward fraud cases. There have been instances where people have applied for multiple loans, and many interesting and creative examples of fraud. The SBA is giving the banks the instructions to perform a good faith review, but they've not been clear about what the banks are responsible for if fraud is indeed detected. Some banks feel more compelled to do in-depth reviews, and in some cases, we're hearing that the SBA is requesting additional documentation from borrowers, auditing the list of documents that need to be collected and retained, but not submitted as they begin the process of granting forgiveness. So we believe that they are working on systems to better understand where fraud may exist. Additionally, they've hired Equifax to provide forensic accounting services. Next, we'll discuss when to apply. So a borrower can apply for forgiveness once all loan proceeds for which the borrower is requesting forgiveness have been used. Borrowers can apply for forgiveness anytime up to the maturity date of the loan. If borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. Next is our belief on strategy for success. So if you cannot use ERC last year and you do not qualify for PPP2, we suggest going for 100% payroll. Borrowers who opted for the 24-week period and used 100% of that for payroll, who submit the loan forgiveness application with branded third-party payroll reports backed by 941s, are having the highest percentage of success in submitting the application. It's just the simplest way to go about it. Drew?
Yeah, at this time, there are confirmed changes in forgiveness, and we reviewed those. So the big one is the simplified version has been expanded from 50,000 to 150,000. And the alternative payroll covered period has become a pick your own covered period with an 8 all the way up to 24-week option. On the next slide, just want to talk about tax treatment because this is a big one. Up until recently, the PPP loan and the expenses were not going to be able to be included as legitimate expenses. But at this point now, loans that are forgiven, the expenses are also deductible. So business owners want to check with their bookkeeper or CPA, but loans were or should have been put on their books when they received them as liabilities. And those liabilities now can be converted to other income. And what's interesting too is that other income should not be included if they're trying to calculate PPP 2 availability, right? So don't include your loan income against your gross receipts if you're trying to calculate PPP 2, if that's potential for you with the 25% reduction. So that's sort of the important parts and very good news on the tax side. And then last is the EIDL grants. These are the economic injury disaster loans that were a part of the original PPP. In most cases, they were $1,000 per employee up to a limit of $10,000. And on the original round, if people filed for forgiveness last year, you had to reduce your forgiveness amount by the amount of the EIDL grant. And retroactively, those EIDL grants are now forgivable. So the SBA is going to pay off those balances if they still sit at a balance with your lender, but also good news. And if someone did pay that off, then that's a credit that they can follow up with their lender.
And that covers forgiveness for now. We hope this information makes it easier for you to navigate through the forgiveness process. Again, if you're looking for more information on PPP, make sure to check out the other videos on our website, PPP2, who is eligible and how to apply. And if you have any further questions, you can reach out directly to Drew at the email shown on the screen. And if you would like to discuss our services available at ConnectPay, please feel free to reach out to me at any time.
And thank you, Matt. Today is January 26th, and I checked the IRS website this morning, and we are still waiting for updated guidance from them on the employer retention credit. So as of this recording, we have a recording that covers the application for PPP2, first draw, second draw, and now this recording, which covers loan forgiveness and the updates. And as soon as we get guidance from the IRS, we will produce a recording around the employee retention credits. And we hope that you find these helpful. So thanks, everybody. And thanks to our marketing team for helping us put this together.